Hello everyone, Doug Tabor here with your Dallas-Fort Worth rental market update, June 2025. Dallas-Fort Worth. This market is not small. In fact, DFW is the fourth largest metro in the country with 7.8 million people and growing. That's not just population, that's velocity. With a 9% growth rate over the past 5 years, this market just doesn't grow, it expands like a Texas brisket in a slow cooker. And here's the kicker, no state income tax. Your return doesn't bleed out at tax time each year. And that's real upside for landlords looking to exchange out of restrictive states like my home state of California, Oregon, Illinois, or New York. Let's talk about the economy. DFW's job engine is on fire. Unemployment is at 4.1% with over 75,000 active job posts on Indeed. Over 26,000 of those pay above the median income. Those are strong numbers for sure. Notable new faces on the corporate block: Toyota, JP Morgan, Dr. Pepper, and TIAA have all moved in. Top employers include healthcare giants, Lockheed Martin, and a few universities with more students than some cities have people. The median household income, $87,155. Not billionaire territory, though there are plenty in Dallas, but one of the highest I've seen of late. Plenty strong to sustain rental demand at those prices. All right, here's your rental market snapshot. Let's get into the core. Average rent for a 2-bedroom apartment or small home is between $1,430 to $2,250 a month. That's 4% higher than the national average. But with all the building, and I mean they are building, rent growth is actually down 1.1% year over year. Yes, rents are still 17% higher than they were in 2020, but the building surge from the 2021 timeframe is having an effect. Half the market is offering concessions of 6 to 8 weeks free rent just to keep up with occupancy. And vacancy for multifamily, it's high at 12%. But that's what happens when 39,000 units hit the market in a year and only 26,000 of those get absorbed. If you're concerned, however, rewind the video back to the beginning and review the population and job growth section. So as normal, landlords are getting creative and rent concessions are the new milkshake. Hey, it's Doug Tabor, CCIM, multifamily broker and host of the Rental Market Update. If you're like many of my clients who've owned rental properties and apartment buildings for 5, 10, 15, 20 years, you're most likely tired. Maybe you're tired of the tenants. Maybe you're tired of the telephone calls, the toilets, the turnover, the terrible teas. We've heard it many times before. And what you're looking for is maybe a little more time off, a little more travel, a little more tranquility. That's why we've created the new webinar, Mastering the Exit. Sell your rentals, defer your taxes, and reinvest into passive income streams. Spend 60 minutes with us as we cover going into a 1031 exchange and looking into more passive options. Maybe you're going into more apartment buildings in another market. Maybe you're looking to reinvest into a net lease asset, or you're interested in a Delaware Statutory Trust or DST, or maybe you have a favorite charity and you want to learn more about the Charitable Remainder Trust. Register for this free webinar, learn more about what your options are so you can get away from the terrible T's and focus more on the terrific T's. Median home values, $377,186. Now that's actually down 2.8% year over year. Price per square foot, $183. Current days on market, 23. It's still a seller's market in Dallas-Fort Worth. Housing starts, a massive 33,600 single-family units began construction in 2025. That's actually double the number from 2024. Builders and developers are clearly betting on DFW for sure. Let's talk about my area of expertise, multifamily. This market's huge, 911,000 total units. Most recently, median price per unit, $238,000. Sold cap rates, actually pretty low at 4.8% on average. However, they are going up as far as listings. Median days on market, 92. I was able to find 152 listings currently active. So that's pretty good if you're looking in the market to purchase. There's also 26,000 units under construction, but that's down from a mid-2023 high of 64,000. So supply pressure is definitely easing. As mentioned before, absorption is lagging behind deliveries, so Class A operators are battling high vacancy and softening rents. If you're buying into this space, your value add play better be backed by a calculator and not hope. Let's talk about operating costs. Property taxes, some of the highest in the country, 1.8% to 2.5% of assessed value. Welcome to Texas. No income tax, but the county's got to pay their bills somehow. And then there's insurance, among the highest as well, due to tornadoes, hail, and legal risks. It's not just an expense, it's Vegas with spreadsheets. Here's some good news. Water costs are moderate, especially if you're sub-metered or using RUBS. How about the legal climate? Here's the shining star in the Lone Star State. Texas remains one of the most landlord-friendly states in the U.S. Rent control is completely banned statewide. No-fault evictions legal with a 30-day notice. At-fault evictions, 3 days notice and you're on the docket. As I like to say, bad tenants don't turn around, they turn over. Security deposits, no state limit, but they're very strict. Return must be within 30 days after they move out. So what's the overall landlord-tenant sentiment? Investor confidence is very strong. Texas ranks second nationally in investor expansion plans. That's institutional capital moving in and not just mom and pop flippers. And renters, they're happy-ish. Surveys show high satisfaction scores, but 70% say they plan to move within a year. So again, retention matters. If you're operating here, it's about cash flow and concessions. If you're exiting, it's about equity preservation and timing your 1031 like a pro. So here's my final take. DFW is big. I mean, it's overwhelmingly big, and it's complicated. It's a market with serious upside, but it also has serious headwinds. Building, for instance. It's not plug and play, and it's definitely not amateur hour. I've spoke with plenty of investors who've not only lost their exes, but have also lost their equity in Texas. You need local insight, data discipline, and a strategy built for turbulence. So if you're thinking about exiting rent control states, like my home state, and rolling your equity into a better tax and cash flow location like Dallas-Fort Worth, check out my free 1-hour Master the Exit webinar. Find it at www.rentalownerworkshop.com. Again, that's www.rentalownerworkshop.com. That's your update. Don't forget to share, like, and subscribe, and let me know your thoughts. Until next time, I'm Doug Tabor, helping you move from the terrible T's of rental ownership to the terrific T's of more time, travel, and tranquility. Talk to you next time.